Hey, how you doing?
I'm doing pretty good. It might not sound like it every now and then. I'm going to do my best to not sound like a dying horse. But, yeah.
All allergies. What are you going to do?
Honestly, I have no clue. But I am very thankful for the weather. How are you doing this far?
You know, I could complain, but who'd listen, right?
There you go. All right, well then let's get off the complaining for a little bit. Here we have our mortgage-backed securities chart. We're really just going to take a look at interest rates and status update. We had last week a real bad week for mortgage rates. They went up, and we've pretty much stagnated. No real changes. Dale, what happened in the markets that kind of pushed us towards this little rise on interest rates?
Well, like we talked about, I believe lending in general we were expecting a larger basis point cut than the Feds actually did. So lenders had overhedged, and so now they're just adjusting. And notice we're pretty flat for the last 2 weeks, and that is not unexpected.
Yeah, so definitely overhedging played a big role. And then uncertainty. We keep harping on that word, but uncertainty in the market makes a really big difference. And when it comes to inflation uncertainty, election uncertainty, economic uncertainty as a whole, they don't really do well for interest rates, mortgage rates, federal funds rates, bank rates, whatever. Interest rates tend not to go the right direction when people are not sure about the future. So what did that mean? Well, okay, let's take a look at actual interest rates. Right now we're at 6.32%. Last week we were a little bit less than that. We were at 6.12% on average. But do keep in mind that we expect this number to rise. Thursday's when they release a new report. So that 6.3% is going to be higher more than likely. Do you think, Dale, that we're going to go back up to, the high sixes like we were a month ago?
We're uncertain at this point. I will say, I've been in this business a long time, as you know. This is the first time I can remember this close to an election, rates going up. Now, maybe I don't remember it correctly, which is certainly possible, but usually election year rates tend to come down a little bit. There's been some anomalies over the years, but we are in uncharted territory. We really are.
Yeah, so here's the make or break for everyone watching. This chart is not linear. It is very jagged. It is very, very unpredictable at times. You have general trends of up and general trends of down, but the truth is that as you start to zoom in and you look a little bit closer to this, you see the volatility within it. So here's where we can go. November's going to come, and the federal meeting is going to take place again. They'll make another decision if they drop rates. If they drop rates, we will see the correction back towards the downward. If they make no decision, or heaven forbid they raise rates, then of course we're going to see this go the opposite direction. So right now it's uncertainty, and because of uncertainty you will see these jagged points here and there every single week as mortgage rates adjust to the uncertainty. So right now we're floating, we're hoping for the best, we're at a stagnation point, which means we're just waiting. And as the weeks go by, we'll have more to update you on when they come.
Yep. Right. Fingers are crossed, toes are crossed, eyes are crossed.
Don't look too carefully, mind. Anyways. All right. Thank you, Dale. Appreciate it. I hope you have a good one.
Thank you too.
All right. Bye.
Bye.